What's up, guys? It's Eric here, Traveling Trading again. So decided to make this video here for you guys who, been asking me about, a lot of you who are in the course and are in the chat room. Wanted to get a little bit of assistance with, being able to find entries and exits on your trades and knowing when to, take profits and when to get in a trade and stuff like that. So I made this video here to help you guys out with that specifically. Utilizing, probably one of the most popular tools that many traders use, and depending on how long you've been in the market, you probably already know about this tool. So I'm just going to kind of brush all over it, give you my thoughts on it, show you how to use it, and pretty much like the best practices with it. It's not available for all brokers, depending on what broker you use. But I'm showing you an example using different platforms, and you can see if your broker has it. If not, find a platform that does allow you to use this tool, and it should be good for you. So, but if you're already familiar with how to use Fibonacci and stuff like that, then you don't need to worry about this video. This is just me just showing you guys how to do this who are having trouble with entries and exits on your trades, and hopefully with that you guys become a little bit better based on your strategy. As I always say, don't solely rely on just one indicator, but this should help at least give you an idea of not only what you should be doing to take your profits, but also what other traders may be doing to take profits as well too, or enter in trades as well. And you'll see how this tool actually pretty much kind of coincides with what I tell you guys a lot on other videos on how I approach entering my trades and waiting for the right moment, waiting for some type of pullback and stuff like that. And you'll see how that kind of almost pretty much mirrors the same thing, just kind of in a different format. Even though I don't personally use this tool anymore, had I been a beginner trader, I wish this would have been something I would have known. It would have probably saved me a lot more money. So hopefully this does that for you guys. I didn't actually learn about this tool until I was about maybe I was about 4 years into trading. So hopefully you're getting a lot sooner than I am, and utilizing it as much as you can. I only used it for a few months. It didn't quite fit my trading style, but I could see exactly how a lot of traders who are successful that use it can use it. But might work for you. What works for one trader may not work for another. So that's what this is all about: finding your trading style, your trading personality, so that you can perform the best at your job, which is making money. All right, so without further ado, let's go ahead and get into this video and learn a little bit more.
What is going on, everybody? It's Eric here again with Traveling Trading. So today got something special in store for you guys here. We're going to cover Fibonacci and Fibonacci trading strategies and retracement tools, and it's going to be a quick little crash course on this subject. And for those of you who don't have the course, or you hear me talk about trends and stuff like that, what we're basically going to do is kind of cover one of the strategies that deal with the trend. Okay, so this is pretty much Fibonacci crash course in a nutshell. The purpose here is going to be able to give you what you need to know about Fibonacci trading, really condensed really quickly. Of course, there's plenty of other videos online about it. This will be similar to it. And for those of you who are watching this in the advanced, trading course and stuff like that, I'm going to go over strategies with it, pros, cons, and all this other stuff that isn't apparently available on the internet for some reason. But I guess people aren't that interested in it. But hopefully you guys are, because it's going to be, longer than most videos, because it's going to be a little bit more detailed. So without further ado, let's go ahead and get into this thing here. This right here is just little example of Fibonacci. You'll see as we go along. But anyways, so what is the objective for today? So today I want to be able to show you guys what Fibonacci trading is, what the retracements are, what the benefits of the retracements are, and the benefits of the extensions are, and basically the best levels to look for that traders typically look for. So just kind of all that in a nutshell in this quick little, YouTube video here. Shouldn't be too long. Now, keep in mind, guys, that, trading anything not just Fibonacci. It does take time and practice to master. And as usual, like I tell you guys, it's better to paper trade, before testing any type of new strategy or using real money, especially when you're learning something new. What I'm really hoping out of this video is to, get you guys to be able to, most importantly, be able to get familiar with entries and exits on your trades, okay? Because I get asked all the time, when do I enter? When do I exit? And it's typically because you don't have that built into your strategy for some reason. But hopefully, I understand that, not never have done anything like that before. It might be a little confusing to know when is right and when is wrong. So this will hopefully be able to be used as a guide for you guys, to be able to do that. Because like I always say, you need to develop your own strategy. Um, and, like I say, indicators only indicate. They should never dictate when it comes to trading. And always use more than one. Don't just rely solely on using Fibonacci. You always want to combine it with something else as well too. Don't just solely rely on that alone. And this does take time to develop. You might not be an expert at it right away. That's fine. Um, you know, get to a point to where you're comfortable with it. If you like using it, if you don't, move on. But like I said, mostly this should help you guys out with finding your entries, finding your exits. Um, and just overall make you a better profitable trader, or at least a more market savvy trader. Or so I hope so. Okay. So let's go ahead and get into this. So what is Fibonacci? Basically, the Fibonacci sequence is, pretty much mathematical computation, um, made by Leonardo Pisano, I believe it was. Um, the way it kind of works is like you mathematically start from zero, and you take the sum of the last two numbers in a sequence and you put them together, and that gives you the Fibonacci number. Like for example, you have 0 plus 1, that equals 1. And then you have, 1 plus 1, that equals 2. Then you have 1 plus 2, that equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. 5 plus 8 equals 30, and so on and so on. You kind of get where I'm going with that. Or you should, anyways. But that's pretty much how that, how the Fibonacci sequence and numbers come about. And we're going to talk about the retracements and extensions levels of the Fibonacci. So that's kind of where all that comes from. And Fibonacci retracement is basically a technical analysis that's used by traders to help determine support and resistance levels. Okay. Um, and they provide, what the numbers do is they provide ratios, for different price levels for the market, where it tends to retrace, a portion of the move before continuing like in an original like uptrend or downtrend, whatever trend is in the direction of. Okay. And the reason why this is important, a lot of traders use it, so it kind of becomes like a self-fulfilling prophecy, whether you think it works or not. um, but these numbers are important. The Fibonacci numbers are important because they're typically seen throughout various aspects of the universe. um, and many traders believe that the financial markets are no different. So you'll see them in like human DNA, shapes and faces, stars, galaxies, shells, sunflowers. I mean, everything in the universe has something to do with Fibonacci sequence. You know, so, and that's where like the you'll hear like the terms of like the golden ratio, where the retracement levels are all derived from that number string actually as well too. So you don't really need to know all this when it comes to utilizing the tool. It's just kind of good background to have knowledge on. If you want to, look up things about Fibonacci and the Fibonacci sequence in your own time, you can. That's just extra information for you to find out, like things about like, the golden ratio and stuff like that. Um, how it's basically, you divide a number by like the second number and that equals like 0.382, um, which is also 38.2%. And all the ratios except for 50% um, seem to be based on that number string when you're dividing the number that's next to it by that. So, and you'll see the different levels that we're talking about as we go through. Okay, I know it sounds a little confused right now, but you'll see as we go into it. All right, so that's Fibonacci. So, well, what is a retracement? Because what we're talking about here is the Fibonacci retracements and the Fibonacci extensions. All right, and again, I'm going to walk you through this live, so you'll know how to do all this. But basically, what a retracement is, guys, it's a short-term price correction during a large either upward movement or downward movement. Okay, that indicates a trend reversal. And if you've been in the markets for a long time, whether it's stocks, you know forex, or any other market that you might be trading derivatives, stuff like that, you understand that they don't just go straight up. They go like in a zigzag pattern, or sometimes like in a wave when they're moving up or moving down. Okay, they don't just go straight up and straight down. All right. So what the retracement is, it's just a temporary price correction within that larger upward movement. Okay. Um, you know, Sometimes they might go sideways, but you really wouldn't be using the Fibonacci during that time anyway. So um, that's pretty much what a retracement is a temporary price correction in a large upward movement. So like you can see here in the uptrend, overall this is a big uptrend, right? But you have a temporary pullback here and a large move up that way. And then in this one, you have a large downtrend, but you have a temporary move back up, then it pulls back down. Okay. And these are just like, screenshots I did off of random stocks that moved throughout the day. So you can see how this can be used every day, for everyday traders as a tool. And some traders do it and they're very successful with it. Some of them don't. It varies from person to person. But using a Fibonacci retracement, it's often believed that, the stock or the underlying security that you're using will typically retrace back to levels that are equivalent to the sequence of the percentage levels of the Fibonacci sequence. And we're going to cover that here in a second. So that's where that comes from. So it's important to kind of understand how does the retracement happen as well too. And I kind of got this off of Trading 2.2. So typically, because people always wonder like, well, if it moves in a zigzag, why does that happen if everyone knows it's going in an uptrend? But what happens is that many traders, what happens is a stock starts, for some reason or another, it could be some type of catalyst. The stock starts to shoot upwards, and then pulls back temporarily, or it could be shooting downwards and then goes up temporarily because buyers are stepping in, and then goes back down some more. So what happens is many traders will get wind of, oh, a stock is moving up, higher and higher and higher, and they, as traders tend to notice this, it begins to get a little bit of traction and momentum up to the upward side or the downward side. We're going to use upwards just as an example, as a default example. Now what happens with some of those traders who are either already in the stock or just got into it and are scalping, notice that movement in the price, and what they do is the original traders who've been in there before begin to take that profit. And that's where you see that little dip come in, okay? Now, as the dip comes in, more traders are, still jumping in to try to get some more of that movement, and it tends to propel the stock in a more upward, motion. And then at that point, some more traders might come in and, move the stock up even more, because these traders that got in at this point are beginning to take their profit. And, the underlying security is still, in an upward trend. So that's how the retracement happens. It typically happens when there's a temporary price correction because some traders are taking profit, but more traders will step back in to, push the stock up higher. All right. That's how it happens. It's the opposite way going, to the downward side. So a lot of traders ask, well, when's the best time to typically use the Fibonacci, retracement and extension tool? Basically, you just want to use it for short-term trading. If you're a swing trader who trades by like weeks or months, or even if you're a long-term investor, you don't need to be using Fibonacci retracement. And of course, this is just my opinion. I've never seen a successful trader using it for a long-term period of time. I've seen like maybe one or two traders I know use it for swing trading. As far as how profitable it is, you can, don't ask me, but yeah, and that's again because with the way this tool works, you need to have movement, upward movement, downward movement. It has to be, typically those movements are quick, and of course, the longer the time frame, the longer it takes for the movement to happen, and momentum can die down a lot easier. So, kind of using that on that longer time frame is kind of tough. because it's more because Fibonacci retracement is more of a form of technical analysis and not fundamental analysis. Short-term trading is going to be more ideal for it to be used on, okay? And you want to use this typically in a trend. You don't want to use it on, you can use it on momentum. Just got to be pretty quick with it if you do. But you usually want to use it on a trend. So when you're trend trading, like I show you guys in the course, how to trend trade, you better be, this will be a good tool to use, okay? Don't really worry about using it in a momentum trading. Don't really focus on using it, especially in a consolidation period. It's not going to work in a consolidation period, okay? That's when you want to use it, short-term trading only. And it could be any time frame. It could be 1 minute, 5 minute, 10 minute, hour. I would say probably the longest you'd want to use it would probably be like a day or two. Definitely don't want to go beyond a week for sure, in my opinion. But yeah, that's when you want to use it. So you're probably wondering, okay, Eric, I know about it. I know when to use it, blah, blah, blah. Now, how do I find the retracement levels? How do I know more about it, what to do with it? So you typically will find the retracement levels when a swing high and a swing low occurs. That has to happen in order for you to be able to plot the Fibonacci retracement tool, okay? What you're going to do there is you're going to draw a line from the high to the low, okay? And then that line is going to, based on that line that you draw, it's going to compute the mathematical computations that you're going to use the retracement tool to find high points and low points at any given period, okay? So like for example here, you would draw a line from the highest point, which is this wick right here, this candlestick right here, spinning top, all the way down to this end here. And as you can see, it plots the levels 100, 78.6, 61.8, 50, 38.2, 2360. Those are like the main levels that, traders are looking at when it comes to the Fibonacci sequence, and you'll see why and all that stuff. So how do you use the retracement levels though? Eric, I have no idea what I'm doing with these numbers, right? Okay, that's perfectly fine. What you're doing here is you're using these retracement levels to act as levels of support and resistance, okay? So keep in mind, when a stock has initially ran up, we said it's going to retrace back, right? It's going to pull back. Typically, it's going to pull back. It is a wide belief theory that typically it's going to pull back to any one of these levels, these Fibonacci levels. The most common ones that people expect it to pull back to is the 38.2, the 50, and the 61.8. Those three levels. And usually, when they pull back to that, they're going to act as a levels of support or resistance. And then some people use them also to ask, risk management for stop losses and things like that. It varies from trader to trader. We'll talk about that a little bit more. But that's what you're looking for. So once you've plotted that line from the lowest point to the highest point, you're watching for that retracement in the price action to come back to one of these levels. I mean, ideally, in an ideal world, 50% would be the level you wanted to pull back from. And this is where a lot of new traders who might chase the stock or not know what they're doing, just jump into a trade, they end up getting stocked out like here or here because mentally they can't handle the pressure of the stock pulling back another 30%, 23%, because they bought in at the top. And this might be you. You buy it at the top, then the stock starts to pull back immediately as soon as you get in, right? That's because it's going through its retracement, okay? These people who bought down here or back down here are starting to take their profit, so the price is starting to come down. However, because it's ran up so much, more traders who are looking at this trade are looking to get in and waiting for a good price level or, what might fit their risk reward to get in and eventually propel the stock back up. So 50% here is acting as a level of support. Some people might want to do 38.2% as a level of support. Some people might want to do 61.8% as a level of support. You can choose. On average, most people are using, that, and that. That's why those are the three most popular ones, okay? And again, I'm going to walk you through all this. It seems a little confusing now, but we're going to walk you through this. I'm going to give you all the little tips and tricks, okay? But this is what happens. And you got plenty of time. Don't think that this has happened like right away, because you could do it on a 1 minute time frame, 5 minute time frame, whatever you want. By the time this has already happened, you pull out your tool, you plot it, and the bars will be there, and you're going to look and watch the price movement, see if it enters back to that 50% level of the support. Once you got your confirmation, then you're gonna, place your entry and take the profit. You'll see how all this plays out. It's pretty neat. All right. But yeah, once you got the confirmation that, support has been established here, then you can go ahead and enter your trade. All right. That's how you use the retracement level. You plot from the highest point to the lowest point, look at your levels, pick which ones you want to be levels of support and resistance, and enter your trade. All right. Again, like I said, important levels to remember are these right here. Remember, all traders who use this indicator know important levels, and this is typically why this becomes a self-fulfilling prophecy with the stocks, because so many traders might be using it. And, if so many people think it's going to happen, it's going to happen. And again, most traders believe that a normal retracement is going to be at the 50% level. Excuse me. A retracement back to only the 38.2% level is going to be considered a strong uptrend, okay, or downtrend if you do it the other way. If you're a short seller, because the direction of the market pullback is going to be very shallow. That's why it's considered a strong uptrend, because it only pulled back 38.2%. That's a strong uptrend. But if it's pulled back to about 61.8%, that's going to be a sign of a weak uptrend, a weak trend. So don't expect much, of a pop there at that point. Okay. And you'll see what I'm talking about in a second. Like I said, if it seems confusing, we're going to, but just kind of remember those key levels: 50, 38.2, and 61%. All right. Those are your retracement levels. Now that you've kind of figured out where to enter in and find levels of support, whether it be 38.6, 50, 68, whatever, now you need to know what is an extension, because you need to know what, now that you're in the trade, you need to know when to take profit. You don't want to get psyched out thinking that, you've seen a candlestick move and now it's time to get out the trade because you're afraid it's going to tank. You want to see it hit that actual target level that you want, right? Okay. So what is an extension? AKA your profit take level. So an extension is a tool that the traders use to define their profit targets or estimate how far a price might travel after the pullback has finished. Okay. So once that pullback has happened, they're going to want to know when they're going to take their profit. At what level do they take profit? Okay. And again, that's up to you as a trader. We'll kind of see in the rest of the course what I kind of recommend for, taking your profit levels, but it varies from person to person. Ideally, where people enter in at their trade, they're going to take that move plus 100. So for example, if you decided that your level of entry was maybe a 50% level of pullback right here, I just kind of made this up on the whim. If you think, oh, I entered in at 50%, which would be, hitting a nail on the head, that's good. And you decide to take profit at some point, your profit target will probably be 150%, which would be probably like way up here, or maybe even like right here. This is just an example. It doesn't have to be that long. It could be something sooner if you want. So obviously at that point, you've made 100% of your money back. So, again, it varies from trader to trader what your profit level is based on your risk tolerance, okay, in your plan. But that's what the extension is. The extension is the plotting of your profit take level after the pullback and retracement has already occurred. And I'm going to show you guys how to plot that. Okay. So what are the extension levels? Like I said, it's widely known for traders to take 100% of the move for whatever they enter. Some people don't want to be too greedy. I mean, it varies from person to person. So let's say, for example, here's the retracement part. All right. And you enter in at the 50% level. Now, as time goes on and the stock continues this upward trend, you might want to take your profit here. Okay. You typically plot the extension level at the point of the swing high, at the highest point of the swing high. Okay. And you'll see me do that here in this example as well. All right. But that is pretty much the extension levels. So let's go ahead and walk through this little live version of how to do this. I'm going to show you guys some quick examples, and then, we'll get it going. All right, guys. So what I decided to do is kind of walk you guys through on how to use the Fibonacci retracement and extension tools. If you're watching this video, on the course, we're going to do this in a lot more detail and stuff like that. So
you know, get ready for that. But if you're watching this on YouTube, I'm just going to kind of briefly go over it as quickly as possible and condense as much of it as possible, just so you can get a general understanding. And if you want to, you know, dig into it some more on your own, it's perfectly fine. But those of you that are in the course, you're going to have to pay attention to all the little finite details I go over with this thing, okay? So that you're using it correctly, all right? So, I'm going to use this live example here. We're going to use LGVN. I had a decent move today, I think. I didn't trade it. I traded like SB, FM. But, you know, this works out well. So I'm going to do this in real time here and show you guys exactly how to do it. Just kind of doing a replay on it. And remember, you don't have to just use, you know, the 1 minute time frame. You can use 5 minute, 10 minute, 15, 30, whatever you want that you think is easier for you to trade as a trader, okay? Don't think you're stuck with my time frame, all right? So let's go ahead and get into it. We're gonna hit play and just try to remember everything that I just kind of went over with you guys in, you know, in this PowerPoint, so that you're kind of understanding what's happening here. And then when you're done, go practice this. You know, if you like this tool or you think it's a good tool, this will be, you know, great for you to help, you know, enhance your trading. So let's just kind of start from the opening bell. As you can see, you know, 6:30 Pacific time, 9:30 Eastern time. This is pretty much how, you know, this will work. You know, the stocks will start moving. And of course, you know, however you find your stocks that you do in the uptrend or downtrend, whether you're using like our alerts, you know, with traveling trading, or if you're, you know, if you have your own scanner and you scan for your own stocks and you find them some way, it's perfectly fine. Just remember that with Fibonacci, you want to make sure that the stocks are going to be either in the uptrend or downtrend, because that's when you're going to use this tool, okay? So let's say, you know, you're going to get notified that your stock, for example, like LGVN, is in an uptrend because you're probably going to get some alert or it's going to hit your scanner, right? So perfect. So now you're watching the stock, and if you're doing like I showed a lot of you guys, you know, you're waiting for something to kind of set up. It's the beginning, it's the opening bell. Nothing's really happening. It's, you know, it's just kind of testing the highs here. Let me speed it up a little bit. So it updates every few seconds. Obviously, this is a little bit faster than what it normally would be, but you know, just kind of get the idea. So here we are. LGVN's breaking highs. You know, you're getting shooting up, right? Speed it up a little bit more. All right. So pretty much, you know, you see the stock moving here, and at this point, right, you're like, okay, this thing is kind of ran up pretty decently. So time for me to start to plot my Fibonacci retracement tool so I can find my entry. Because remember, the retracement tool is where you find your entry, and then the extensions is where you know, use for your exits and profit take. All right. So how do I plot the entry? Remember, you want to find the highest point for the stock all the way down to the lowest point. So first you're going to do it here in TradingView is going to click on this right here. You're going to look for Fib retracement. Plot the highest point. Sorry. You got the highest point there and the lowest point there. You want to start from that. Let me pull this up here. Fib retracement. So lowest point, highest point. The highest point should start with 0. The lowest point should be 100. Why? Because you want to see how much a percentage that it's going to pull back to. All right. Now take a quick second. If you kind of look at this, oh, it didn't show it on the side. But anyways, you want to always kind of, you know, realize the range that you're trading in as far as cents as well too, from $13.40 to, you know, $12. That way it helps you kind of get an idea of your risk to reward. Just my little tip there for you guys. But so let's say you want to enter in when it pulls back to maybe 50%, right? So you want to enter in right here. Now at this point, so that's 1260, right? So at this point, you understand, okay, it's in an uptrend. Now it's doing its pullback down to 50%. That's where you want to enter at. You want your stop loss to maybe be, I'm not even going to say 61%. Let's say if you want to give yourself a bigger stop loss, to give yourself a, you know, more room to kind of breathe, smaller shares, and you want it to be 78.6. Because remember, the key levels are, you know, listed on there. You don't have to do the mathematical calculation of the Fibonacci sequence. The tools does it for you. And again, you know, there's certain levels that traders look at. You can pick which ones you prefer. Doesn't have to be, you know, what's listed. All right. But let's say, for example, you want your risk to be 78.6, but you want your entry to be 50%. You're fine with that, right? So we'll hit play. So now you know where that level is, right? So at this point you can plot it, and let's just say you got in, all right? And I'm doing this, I'm just trying to break it down piece by piece. Obviously, if you're doing this in real time, you'll be able to pick on it a lot faster and do it a lot faster. And you might not even need to do it in 1 minute. You might do it in 5 minutes, so you have ample time to do your little calculations and stuff like that. All right. So you entered in at 50%, right? Now that you're in the trade, now that you find your spot with the retracement tool, now you need to find out, okay, where is my risk to reward and where is my profit and take. That's where the Fibonacci's extensions come in. So it's a 3-click type of tool. First click you want to have is where your resistance is, or not resistance, your risk to reward is going to be at. So you want to calculate your stop loss, okay? So let's say I said my stop loss is going to be at the 78.6, right? So that's the first click. The next click you're going to have is going to be where you plan on entering in, all right? Now let's say you wanted to enter in at 50%, you would have calculated that. The third click will just be pretty much anywhere in extension, into the future of where you wanted to trade. Just so you can kind of, have an idea of how long the time length is you want to do it. And again, it could be on any time frame, and you can adjust that. So it doesn't matter. So that's pretty much your 3 clicks. Your stop loss, your entry, and your, time frame. So then it's going to generate this right here. You see these levels right here? These are your profit take levels. So obviously, kind of like how I mentioned, in the presentation thing, you enter in at 50%, maybe your ideal profit take might be, 150% or 161%, whatever it is, to each his own. You decide what that is based on, your personal preference and risk to reward. So let's say I enter in at 50%, but I want my profit to take level to be 150. Well, let's get a little bit more aggressive. Let's just say, let me actually clear this out. Because you can see it goes all the way up to, 400. It doesn't have to be that long if you don't want it. I'm just going to move it over a little bit so you guys can kind of, see the difference in the numbers. But remember, you entered in right here, right? And these are your levels. So let's hit play for a little bit. Like I said, whether you want it to be 100 or near 150 is up to you. But you entered in at 50% because you knew the retracement was coming back to that level. So you got in, and now, the stock is moving, Because remember, it's still overall in an uptrend. Sorry. It's still overall in an uptrend. Your risk to reward is down here. Your profit take level is going to be when it reaches here. So, voila, you could have took it. You could have took your profit there. And really, ideally, you wouldn't need, the extension tool unless you're not really, familiar with how you want to take your profit. But for some people it helps. Some traders who use this tool knows that, okay, once it pulls back to 50%, I'm getting rid of it when it goes back to 0%. But again, stock is in the overall uptrend. Excuse me, until it's done. So try not to get that mixed up with reversals. A lot of times that happens, and we'll touch on that here in a second. Some traders get reversals mixed up with pullbacks, et cetera, and I'll show you how to fix that for you guys that are in the in the advanced course and stuff like that. So just kind of know, that's how the tool works. Once you see the price action reach into your zone of profit take your profit. If it gets below your risk reward, get rid of it. But yeah, you ideally want to know, different levels of support and resistance. As you can kind of see, I didn't even plan this out. Look at this. This was a key level of resistance. It broke through. There was another level of resistance where it's actually getting stopped out. But let's see, what happens. Does it break that level of resistance and speed it up a little bit? Well, when you look at that, it broke through another level of resistance. So you got all this time to kind of plot, these different, strategies and levels of support, resistance, and profit take. As long as you know how to utilize your tool, like the Fibonacci retracement tool, and when to use it, it's a good strategy. And it kind of becomes a self-fulfilling prophecy. Now, depending on the back testing that you do for this, it might vary from person to person and how you back test it. I've seen traders back testing and say it didn't work. I've seen traders back testing and say it did work. It also could be the type of stocks that you're back testing it on. It could be the environment that you're testing it on. So, to each his own. Like I said, utilize this tool however you see fit. I just wanted to show you guys exactly how to use it. Um, do I personally use it? I have before. I don't as much now, because I can kind of eyeball a lot of this stuff. Again, been doing this for years, so I don't really need the retracement tool. But for those of you who are confused on like, hey, how do I know when I'm dip buying, or how do I know when it's purely reversing? This might actually be a tool that can help you identify that. But again, this is kind of just a condensed version of it, tip of the iceberg. Like I said, we're going to go into a little bit more detail on how to like narrow it down for you guys so you can get a better sense of it. But hopefully this part of the video helps you. We're going to go ahead and jump into some more detailed stuff. Other than that, fun tool to play with. All right.
All right, so we're back. Let's stand up here. So hopefully you enjoyed that. It makes sense, and you kind of understand where all that's coming from. Okay. So let's just kind of talk about the benefits of the Fibonacci tool and all that good stuff. Some some of the benefits here, and this is just a little bit. I like to go off the top of my head. You get to buy true dips. A lot of times new traders, especially, are confused of when dips happen, and they think a trend reversal is a dip and it's not a dip and all that good stuff. But this tool makes buying dips much more easier and much more recognizable for you, and also helps you be able to spot reversals and stuff like that too. Your entries end up being a lot better because you're having time to draw the current high to low, and finding a good retracement for you to enter into the trade and manage your risk to reward better, which is the next little tip there. Your risk to reward becomes much easier for you, because you now have a predefined level of where you want to aim for with your trade. Okay, and you can figure out if you're getting too greedy or if you're being too conservative, based on the type of stocks that you look for to utilize this tool with. Okay. um, you get better money for the rally. Instead of buying high because the stock went up, pulled back, and now it's going up again, and now you're getting in because it pulled up again. You could have got in on that retracement because you knew it was a retracement versus you thinking it was just about to crash. So you got a better idea of seeing that. You get more money for your rally. And lastly, too, I already said better risk reward management, but lastly, you also get to find your market moves a lot easier. It helps you again identify trends in the market, and just better overall, market moves. You'll be able to say, okay, I know this thing is reversing because of the fact that it, broke below the support level that I assumed it would retrace back to. Um, or hey, I'm at 150%, and this thing is starting to die down and come back down, and is broke. I drew another retracement from that point, from that high low, and now it's broke between that. It looks like the trend is starting to turn around, and I can go ahead and get out the trade and take my profit. So it becomes a lot more easier for you to plan, take profit, and all that good stuff using this tool. Again, don't solely rely on just the Fibonacci retracement and extension tools. Combine it with other things, and you'll be much better off. So let's just kind of recap here what we learned today. Hopefully this video helped you guys out. Like I said, what we learned was basically what Fibonacci is, who made it and all that good stuff, the Fibonacci sequence and the numbers. We talked about retracements, how they help you find levels of support in resistance on a big upward trend, and being able to plot your entry. We talked about the benefits of it. We talked about how it helps you manage your risk. If you waiting for the 50% pullback and you enter in, or you wait on the 61.8% pullback and you enter in, and it's a weaker trend, you know you get better at that. And then there's the extension levels. We talked about how it helps you with taking profits and exiting the trade, knowing when to get in, knowing when to get out. Um, and we talked about also, the best levels that traders look for, 38.2, 50, and 61.8. That's very common. Um, so that's, pretty much the whole video in a nutshell. Um, hopefully this video helped you guys out. Again, if you're, watching this video on YouTube, hope you learned something new. If you're watching this on the course and stuff like that, we got a lot more to go over. We're going to go over some strategies with Fibonacci. We're going to talk about, problems with it, how to overcome those problems. We're going to talk about testing it, back testing it. We're going to talk about the strategies that I would use, my thoughts on it, and all other good stuff. We're just going to go into a little bit more detail with it to kind of help you guys get a concept of it. But again, no matter whether you're watching this in the course or if you're watching this, just on YouTube, practice, practice, practice. I can't stress that enough. You can learn as much as you want about the market, but you got to actually put this stuff in play and apply it to your market. The biggest thing for traders using this tool, they're typically probably using it on the wrong, type of stocks. So that's something to consider as well too. Make sure the type of stocks that you're trading is going to be able to fit with this trading tool. Okay. And again, as far as like what stocks do you choose to use this tool with, it's up to you, depending on your trading style. Again, those of you who have the alerts, you got a quick shortcut. You already know what stocks to look at. You know what stocks you can trade because you already know that the stocks that we trade make big upward movements. So this, would be applicable for you to put, the tool to use. Okay. As you can see, we, with LGVN, and, I could probably do it with a few other stocks off the whim, but I'm not going to keep you guys too long. So enjoy that video. I hope that example helped you guys out. If you guys have any questions, let me know. We'll move on to the next slide here for those of you that are in the course, and we'll get on to some more stuff. Okay.
All right, guys, that's a wrap. I hope you enjoyed this video. If you did, please do me a huge, huge favor. Hit that like button, thumbs up button, subscribe, comment below, all the above. Let me know your thoughts. I don't know, how do you feel? Do you think that the Fibonacci tool is going to be something that you utilize? Do you like it? Do you don't like it? I mean, I've heard mixed opinions on all. I definitely want to hear you guys' thoughts on it. Let me know what you think. If you didn't like this video, if you did like this video, you can email me too if you don't want to put it on the comments or something like that. But just kind of give me some feedback. Let me know if you like this video. I'm sorry I'm not a video producer, editor, or anything like that. Kind of making these videos up on the fly for you guys who are like truly interested in learning how to trade and get better at it and perfect this, because this is a lifelong skill that you can use no matter what happens in the world. No one can fire you from your skill. So the markets are definitely not going anywhere. If anything happens to the markets, we got bigger problems to worry about. All right. So we will reconvene at another time where we learn some more stuff. Until then, stay green.